Hi, it's Brent, and it's time for another chart breakdown for our chart breakdown series at Trade Therapy. We're looking at Exxon Mobil. Exxon was part of our top-down analysis for our Clarity Spotlight on Chevron last week. So quick video running through the charts that we covered as part of that analysis. We are looking at a long-term monthly chart for Exxon. We do talk a lot in Trade Therapy content about utilizing longer periods to identify potential problem areas within the trend. We do see here Exxon running into its all-time supply line or resistance. It is called a supply line because that is where institutions and larger holders have historically been dumping their supply or selling their long positions. That's what causes the resistance. Not surprising to see Exxon up against its long-term supply line and potentially distributing here after its massive run after the COVID low here. If you look back at the historical runs, this is the great financial crisis. This is the dot-com bubble. You can see that these, comparatively speaking, both fail, just don't even compare to how strong this uptrend was, how strong this market was. Very surprising considering we were inundated with nothing but recession headlines and fear, uncertainty, and doubt over the past few years, and then we see institutions running up positions up to their all-time supply lines here in Exxon. So, just another example of why you shouldn't listen to the news and follow the data. The charts and the data will tell you what the institutions are doing. And if you can follow that and master that, you're going to be okay, no matter what the news says. We take a closer look at the run. You see these tight candles here. This was redistribution here. We go back and look at the previous chart. We can see that Exxon began distributing right here. There's a big reversal candle right there on a monthly. It came down and then redistributed in this area right here. So if we take a closer look at it, we can see that there's a series of tighter candles right there. You see all of these monthly candles all either bottoming or opening right in the same range right there. That creates strong resistance to a long trade. This is a short position. You can see that they use this position. They built a cause right there to create an effect, which is their markdown and completing their markdown campaign after distribution. On a long trade going up through that area, you see that price comes up and it stops right here. It has trouble having difficulty getting past this as the bears are defending their short position here. Then you see this massive candle right here with this huge volume surge. That's how institutions push through resistance. They then push up into the upper ranges and begin their distribution process in this gray shaded area right here. There's a series of reversal candles on a monthly basis. This is a very strong resistance that is forming within Exxon. So it leads us to believe that we are going to see a distribution, a markdown campaign occur. I've jumped over to today's live chart. Once again, we can see this heavy upper shelf within the volume profile. This is retail buying the top. Sadly, once again, this is the Wall Street position, the institutional position down here. You can see it reaccumulated right in here, which is why it produced this volume shelf right there. As it was struggling to get past this point, they reaccumulated and then used volume to overwhelm the short position here. So demand greater than supply conditions kick in and the markup campaign continues. We get into this sideways action here. We talk a lot about in trade therapy content what creates these series of peaks and valleys right in here. During this time period, what's going on? These are CPI readings at the top, FOMC meetings at the top. This is when headlines are of upcoming recessions are all hitting the airwaves, scaring all of the retail investors away. That then they push price back down here and then bring it right back up, only to dump their positions on them once again. So that's what creates these series of peaks and valleys. We do see an upthrust after distribution right here. What that means is there's a peak. It's similar to a Wyckoff spring move during an accumulation structure. So if you consider, if you were to flip this chart over and consider this down here as an accumulation, a Wyckoff spring move is intended to take out all of the liquidity under the entire accumulation structure. The same thing plays out on top. They are taking out all of the liquidity for the short trade. That's why it extends up higher than all of these other peaks, because they are about to kick off their markdown campaign. This is a last point of supply. This is the last of their long position that they are dumping. We do expect to see a supply kick in here. Exxon's earnings are before market opens on Friday. We do have the presidential election and the FOMC meeting directly after that. So there are plenty of catalysts that Exxon, or that institutional owners of Exxon will be able to use as reasons why they're dumping their positions. Reality is they've already exited their long position. They're ready to go short. The headlines are just cover for them, excuses that they use to sell off their positions. We do expect it to come back down here and retrace about 50% of this move, which would take it down to the 0.5 Fibonacci level, which coincides with this reaccumulation volume shelf right in here. So if you're long Exxon, I hope you're listening. It is a time to raise your stops. If you are looking for a trade opportunity in here, the trade that we would consider is taking a short position with a stop loss just above this all-time high right here, and then riding the markdown campaign down. It'll probably hesitate. It'll come down here to the 200 weekly exponential moving average. It'll probably come down, test that, bounce around in here a little bit before it then drops down steeply in a markdown. So I hope that was helpful. Hopefully everybody got a lot out of the Chevron Clarity Spotlight last week, and hopefully this video helped with the consideration of all the Exxon charts that were part of our top-down analysis.